Joining me to look at the equity space is Shuan Dendere from Trive Investments. Thank you so much for your time, Shuan. Of course, we have to talk about the Fed because we went from expectations of 6 interest rate cuts at the beginning of the year, and now we are down to 1. But would you say that there's still optimism because markets are still talking about, and at least even the Fed is still indicating an interest rate cut, even if it's 1?
100%. Firstly, thank you for having me. I think the US economy has really been surprising for most of the year. It has been quite robust when it comes to, job numbers and so on and so forth. With regards to rate cuts, we saw inflation cooling this week, which has been a positive sign. I don't necessarily believe, in my opinion, that the Fed will keep the interest rates as high as they are for too long. I do think there may be a couple cuts coming our way because as we can see that the inflation number is starting to cool. We can see that everything is starting to be priced in, and the markets are really performing from a place of anticipating eventual interest rate cuts.
It's quite interesting, Shuan, because the Fed indicates 1 cut and the markets are still saying a couple of cuts, maybe 2 or 3. But of course, we'll see how it goes as the year progresses. Of course, even ahead of that, we did see the US markets, particularly the NASDAQ and the S&P 500 reaching fresh record highs. But really the JSE kind of remaining on the back burner. Is there still kind of this theme of two worlds and divergences between what is happening in those US markets and the JSE?
So I don't think so specifically with the JSE, right? I think the JSE will eventually start, tracing what's happening in the US markets. I think the South African economy from a trading and investment perspective mirrors to a certain degree what's happening in the US. So there will be divergence naturally because we've got our own dynamics here, politically, infrastructure-wise, etc. But the US tends to lead, and then there's a domino effect to South Africa.
Yeah. Well, actually, let's talk about that because, for example, your superstars in the US have been the AI stocks. But here back at home, particularly this week or the last 2 weeks, the superstars have been the banks and the retailers today as well. Is this an SA Inc. story where there is a significant turnaround in terms of risk-on sentiment for the SA Inc. stocks that have really been beaten down for the last while?
It's difficult to tell. I think let me just zone into the banks real quick there. Is that, the banks have been they really do well in an environment where there is high interest rate, meaning on their books, they're definitely going to be earning a lot more cash, meaning that they just have more money to invest in themselves and grow and so on and so forth. So you'd notice that with the banks since last year under this environment, their numbers have been really, really positive, right? If we're looking at the retail side of things, the resale side of things has been quite fascinating for me because we've been speaking to is that, we're operating in an environment of high inflation, high interest rates, low GDP growth, high unemployment. But, we've seen a couple of results come through this week. Specifically, I'd like to zone into maybe Premier Foods, for example. They have had, really, really brilliant results under the conditions. We've also got TFG that's also had good results under the conditions. So you could see that, the South African, and I mean, you called it SA Inc., is that they are able to drive through the turbulent times, regardless of what's happening in the macroeconomic environment and economic policy at large.
Well, actually, just as you're talking about TFG, because it seems that markets have really leaned towards the fashion retailers and in the past, and not necessarily on the food retailer side, except for ShopRite. Do you kind of see the sentiment that maybe there's more optimism, maybe more upside for the clothing retailers versus the grocery retailers, except for ShopRite?
The grocery retailers, they're definitely an inelastic good. So I think they will definitely always be in and around that positive sentiment from a share price perspective and performance. Because at the end of the day, if we were to take it down, we still gotta eat, right?
Yeah.
With regard to the retailers, I think your likes of your TFGs, your likes of your Mr. Prices, they really do service the larger population. So there is a lot more room for growth there because of their price point in terms of the goods and services that they're providing. I don't technically believe that they could overtake, for the lack of a better term, your food retailers, but they will be chasing right behind.
All right. Well, talking about chasing, what are you chasing today? What is your stock pick?
So my stock pick is BYD, which is basically an electric vehicle company. Just looking at their company in this past quarter, they've actually outsold Tesla. And looking at from the manufacturing point of view, is that they are subsidized by the Chinese government. So they are out there making really, really affordable electric vehicles in comparison to your likes of Tesla and so on and so forth. I've even found it interesting that in the US and in Europe, they've actually imposed tariffs on BYD in order for their electric vehicle sales to be a little bit more competitive. Regardless of those tariffs, the share price seems to still be rising. So it is an interesting stock to look out for, especially with the world going green in the near to long-term future.
All right. Well, thank you so much for your time and for your analysis today, Shuan. Appreciate it. That was Shuan Dendere from Trive Investments.